Hi, this is Courage from Trading with Tan. In today's video, I'm going to show you the strategy that I'm using to trade my $10 account, which I'm trying to raise to $100. I'm going to try and document the process. So if you want to see more videos of how I'm trading this small account, make sure to subscribe to the channel right now. So the strategy is simple and I've been talking about it for some time, but I've made a few changes to it. So we'll talk about the strategy. So with this strategy, I'm going to be looking to catch the trend reversal, because since this is a small account, if I get into a winning trade, I want to ride the trend as much as possible and make as much money as possible. Also, we are going to use the MACD. The MACD will show us when the trend is about to reverse, and then you are going to identify the oversold and overbought of the market using the RSI. So simply what I'm saying is, if we see a market which is in a long-term trend, we then want to look at the RSI and the MACD to see if the market can reverse in the oversold or overbought zones of the market. So I'm going to show you the strategy in a minute. Also, before we get started, I want to tell you that this strategy works on a 5-minute time frame to 15-minute time frame. And also, you need to use zoom level 1, which is the smallest zoom level of your screen. So let's go ahead and let's set up the indicators step by step. So the first indicator that you want to place here is the MACD. So the MACD, you click on F and then you find MACD, moving average convergence divergence. And the reason why you use the MACD is you are trying to catch the reversals, as I said. So make sure you leave the parameters to default. It comes as 12, 26 and 9. Don't change anything, and then you click done. Once you click done, the next indicator that you want to place, once you have the MACD right here, is the RSI. But you want the RSI to come on top of the MACD. You want the RSI to measure the oversold and the overbought situation of the MACD, not of the actual candle. So you click on F, you go to indicator window, you click F+, and then you find the relative strength index. So you click on relative strength index and you apply period 14 and apply to previous indicators data. This is very important. Previous indicators data or first indicators data. And this will put the RSI on top of the MACD. Now put the levels to 10, 90 and 50, and also make sure this tile, on this tile here, make sure you put the color of your background. You don't want to see the RSI line, we just want to see the levels, because we are not going to use the line, we are just going to use the levels, right? So I'm going to put white because I use a white background. If you use a black background like other people, make sure you put the black background and click done. And once you do that, you are going to see that the RSI will sit right on top of the MACD. And before we go anyway, if you can see this here, you can see that when the MACD touches the bottom line, the 10 zone here, the next thing that happens is the market rallies to the top, right? So I'm going to zoom out my charts right here to the first zoom level, because what I want to do is, once I get into a trade, I want to write it as much as possible. So if I do this, you can see that I had a chance to enter at this point here, right? I enter at this point here, and then I ride the market as far as the MACD goes to the top of the RSI. So this gives you a very good risk to reward ratio. You can cover like 10 trades, right? If you lose one trade, you can cover like the next 10 trades with this, because once you get into a winning trade, you are going to ride the trend for a very long period of time. So as you can see right here, again, we had an opportunity to enter because the MACD touches the upper side, right? The 90 zone here, which is the overbought, right? And from there you can see the market going down. So you can double or triple your account with one trade, right, with this strategy, because once you enter into a trade at a good time, you can ride the trend as much as you can. So if I move this, you can see that whenever the MACD touches the upper side of the RSI, the next thing that you see here is the market moving down. So let me show you when to put your stop losses and when to take profit. So let's say you enter at this point right here. Let's say you enter at this point right here and you are riding this trend going up. What you want to do is you want to exit. Either the first point of exit is either when the MACD touches the middle line, the 50 zone here. But for some people, if you are good in controlling your emotions, you can let the trade rise until it touches the upper side of the RSI. So as you can see, when the MACD comes from the upper side, it usually goes down until the lower side. So make sure to ride the trend as much as you can, especially if you have a small account. So for the stop loss, let's say you enter at this point right here, you want to put your stop loss below the lowest zone, because what happens is the crossover will happen after a small reversal. So when you see the MACD and the histogram crossing over, so this is the crossover that I'm talking about. As you can see right here at this point, the MACD and the line are crossing, right? So the histogram here moves into the inside here, and then the MACD line moves to the outside. This is the crossover which I'm talking about, which happens around at this point here. And then from there, the next thing that you can see is the market going to the upside, right? So with this strategy and proper risk management, I'm going to try and raise my $10 account to $100 or more. If you want to learn more on how to manage your risk, make sure to like this video and join our Telegram group. I will put the link in the description below.